I want to say hello to everyone and welcome to our CARES Act overview with some great experts today on our panel. I'm Devon Laney. I'm the president and CEO of 36 Degrees North, and we are proud to be able to provide this service today to the community here as we all deal with the challenging situation that we are in, dealing with the coronavirus and all the fallout that is still ongoing from all of that. I'd like to begin by introducing both of our panelists today, who we are very fortunate to have joining us. First up is Matt Campbell. Matt is a 20-year attorney with experience in private practice and in the Fortune 500 corporate tax department. His practice at Estill is concentrated on tax and international tax law, serving clients nationwide. And prior to joining Estill, Matt was a tax director for Technip FMC in Houston. In addition, he previously worked at professional service firms Ernst & Young, BKD, Aronson & Company, and KPMG. Our other expert today is Howard Walthall. Howard served as the Executive Vice President, Strategy and Market Development for Aerognosis from 2017 to 2020. Previously, he served as President and CEO of New Tech Medical from 2013 to 2017, and as President and CEO of New Tech Spine from 2011 to 2017. Prior to joining New Tech, he was a partner at Burr Foreman from 2006 to 2011, and served as an adjunct professor at the University of Alabama Law School from 2005 to 2011. Mr. Walthall has a BSc in Biomedical and Mechanical Engineering from Duke University, and a JD from the Cumberland School of Law at Samford University. Welcome to you both, and thank you both very much for taking the time to be with us today and share your expertise on the CARES Act. Just a little housekeeping before we really get started with everything. I'd like to ask all of our attendees, if you have any questions, you'll notice at the bottom of your screen, you do see a Q&A button. I'd like to ask that you all send any questions you have through that Q&A, and then at the end of the presentation, we'll go through those questions and give our experts here a chance to answer those directly. So if you've got any questions, make sure you use the Q&A tab at the bottom of your screen. And with that, gentlemen, I will pitch it over to you.
Well, we appreciate the invitation to get this information out to the business community where it can be utilized and hopefully help with staying in business, which is important for all of us at this challenging time. A lot of information on this program. It's still being interpreted to some extent. There's even been movement from last week to this week, but we'll give the rules of the road, as it were, the best we can today, and hopefully that will help with applications that go in. I actually had a client that had their PPP loan application received notification it's been approved. So these loans are being processed. Some of the national lenders, such as JP Morgan and Wells Fargo, felt that there was some additional clarification that was needed before they would start processing loans. I suspect that is no longer the case, and they're starting to move forward as well too. So if you don't have a PPP application in, no worries. There's $349 billion that is allocated towards this program for small businesses. It's targeted for businesses with less than 500 employees, although there are some exceptions for industries like hotels or restaurants, depending on what their SIC code is. Sole proprietors and independent contractors also are eligible for this program as well. Howard, can you move to the next slide, please? So in this slide just really sets forth that the purpose of this program is to help provide immediate cash flow assistance to small businesses, to help incentivize them to not lay off employees. I've got, or I'm aware of businesses where they have had some layoffs prior to the implementation of the program or shortly thereafter, but there's a mechanism that so long as those employees are hired back before June 30th, there still is an opportunity to get some forgiveness of this loan, and that's what has some people very attracted to this program, is that up to 75, well, a portion of the loan can be forgiven. Howard will talk a little bit, or we'll both talk a little bit more about this later in this presentation. SBA is indicating that the use of the, or due to likely large subscription to this loan program, probably no more than 75% of the loan could be forgiven. That's only if those use of the loan proceeds goes towards payroll. So keep that in mind when the application is made. And on the back end, I'll also talk about the economic injury disaster loan program, which actually can be used in tandem with this program. There's a lot of literature or commentary this last week or so that questioned whether both programs could be utilized, but I've confirmed that with SBA that a business can avail itself of each program so long as the use of the proceeds are for different uses, and there's some check boxes on the applications for that. Howard, can I turn it over to you right now?
Yeah, so as Matt already mentioned, the target of this is basically companies that have less than 500 employees, all the way down to sole proprietorships and independent contractors, 1099, to work for themselves. It also covers nonprofits if you have nonprofits in your group. And there's certain kinds of entities in certain industries where the limit may be higher than 500 employees, but principally you can think about the 500 employees as being the main requirement. There is some nuance there. If you have a large investor or you have a group of affiliated companies that you're affiliated with, you need to dig a little deeper because they may all be counted together. So if together they're less than 500 employees, no problem. But if you counted them together, let's say like you had a private equity investor that owned a majority, they might aggregate their other companies together with you. So that's the one area to watch out for. Other than that, it's a fairly easy exercise of counting your employees. And you had to have been operational as of February 15th, 2020. The purpose of this is not to support new business ventures. It's to try to keep people who have been in operation going and keep their employees on board.
Howard, can I jump in just for a second on the
Sure.
Being in operation on February 15th? I'm seeing and reading some stories about some businesses that they perhaps didn't have a loan with their existing lender, and they're called the orphan businesses. There is an expanded list of entities that actually can lend through this program. It's not just previously SBA approved lenders. So hopefully that will be worked through. But if you've not taken out a loan with whatever institution you reach out to, just be aware that may be an issue. And I think some guidance will come down to clarify that so that those loans can be processed.
Yeah, that's a good point. I mean, I think this is, one of the practical challenges right now is getting banks to process these loans fast enough because of the demand. And of course, the banks are tending to deal with their existing customers. So if you have an existing banking relationship, you may be in good shape. If you don't, as Matt said, they're adding new lenders to the program. There were relatively few SBA loans made last year, and there's going to be a lot of these loans made. So they need more lenders, including some non-traditional fintech type companies that are signing up. So I do think that the stable is going to expand, but right now it can be a little bit challenging if you don't have an existing banking relationship. So stay with it. So the loan program is intended to allow you essentially to borrow 2 months worth of payroll and basic expenses. It's actually, as we'll explain in a minute, how they actually calculate it. But you can tell that Congress was thinking about paying your employees, paying rent or mortgage interest, not principal, paying utilities, your most basic expenses. So even if you end up having to lay off some employees or reduce payroll, you can get full or partial forgiveness depending on your ability to rehire those employees and exactly how much you're trimming your payroll. So you may take a deduction to your forgiveness if you reduce your payroll partially. So you have to meet the following two conditions to have full access to the forgiveness amount. You have to maintain the same average number of employees for the 8-week period following the origination date of the loan, which I think we're interpreting it as that being when the loan is made, not when you apply for it, as you did in the time window of last year, February through June, or if you were not open then, if you're a newer business than that, January through February of this year. And you have to continue paying employees who make less than $100,000 annually, at least 75% of the amounts you paid them in the most recent quarter. So you can ask for some cuts to wages, but you can't cut it too much or you start to cut into the forgiveness amount. And this is actually a redundant slide, so I'm going to pass it back to you, Matt, for the next slide.
Okay. Well, just kind of following up on what you said there, for a company that had some recent layoffs and anticipation of a slowdown, they probably are better off taking that latter testing period on the slide before, I would think, so long as there's some rehiring that takes place. And so, businesses are really going to have to, do some calculations to try and, figure out how to best maximize the forgiveness component. To the extent the loans, these loans are at 1% interest. It's payable over a 2-year period. I understand, at least prior to Friday, to the extent the loan is not forgiven, the loan could be extended out over a 4-year period, I believe, at no more than 4% interest. I'm not sure whether that 4% has gone by the wayside. Do you know, Howard?
I think they've basically sort of solidified it at, as Matt said at the beginning, that, this is somewhat uncertain because the SBA is trying to implement this huge program in a week. So they're continuing to tweak it, but it looked to me like, what they're providing for is 1% for 2 years, and they really haven't, said something specific about allowing it to go past that yet. Okay. So their idea is you ought to be able to get back on your feet and get this paid back in 2 years.
Yeah, and the 1% actually was raised last Thursday. Secretary Munchin gave a press conference and said that the 50 basis points wasn't enough for some community lenders for them to be able to borrow and make it worthwhile for their administrative costs, and so that got bumped up to 1%. So this is a fluid atmosphere. There was actually a separate PPP application, both for the separate application both for PPP and EIDL that changed last week as well too. The PPP application now being utilized is slightly better designed and eliminates some affiliation issues that could exist for foreign affiliates. Say if a foreign affiliate had more than a 20% interest in a U.S. small business. Let's go to the next slide to 8, or is this the one I'm supposed to be on, Howard?
This is the one.
Okay.
It explains what gets forgiven.
Okay, so our understanding is that the time period to look at for forgiveness is from that origination date of when the loan is created and the funds become available. I've seen some commentary questioning whether a later time period could be utilized, keeping in mind that some hiring may take place or rehiring may take place before June 30th. But in what we see right now, as of April 6, 2020, Howard and I both think that is measured from the origination date of the loan. What can be forgiven is the allowable uses of the loan, but the SBA has come out and said that to the extent that they think this program will be as subscribed as what it will be. They've basically given, I'm jumping to the bottom bullet point here, that 75% of the amount forgiven must come from payroll sources. I think that does further legislative intent on Congress wanting businesses to retain their existing payroll, but where exactly the 75% comes from is a little ambiguous. I've seen some comments that it's based on a variation on the 2.5, the 250% calculation that determines the upward loan limits. But jumping back to the second bullet point, it can't. Payroll costs in excess of $100,000 aren't going to be forgiven. That needs to be backed out in the original application for the loan as well. Utility payments is something that can receive some forgiveness, again, likely capped at 25% overall. Rent payments or mortgage interest are also forgivable amounts. Although if, jumping ahead, thinking about the EIDL program, if the loan that was approved, for one of my clients earlier today was for a hotel. Their average payroll was so low, it was a smaller hotel, that their loan amount was only $35,000. So they, in their application, limited its use only to payroll costs and utilities and some other operating expenses, but carved out the mortgage interest from that because they plan on utilizing the EIDL loan program for that. So if you do plan to use both programs, you'll have to think through on your application what those uses will be to try and maximize the benefits from both programs. Another exception to the amounts that relate to payroll or not to be, relating to payroll taxes aren't to be forgiven as well. There's a lot of commentary going around the tax community on how to determine what the actual loan amount is, which is 2.5 times the average monthly payroll and around these forgiveness issues right now. But hopefully we'll get a lot more clarity this week as SBA starts processing these and the tax community and business community push back for clarifications on some of these issues. Let's go to slide 8. Benefit under the PPP program is that there's no personal guarantee or collateral required, particularly if you have a partnership business. That really speeds the application along because you don't have to seek those guarantees. There's no loan fees or prepayment fees. Although the SBA is currently setting the maximum application fee. Howard, do you know what this refers to? I'm not sure.
Yeah, I think that's internal. I think that's setting the fee that the banks can pay agencies.
Oh, that's for the lender then. Okay.
Yeah.
The PPP notes that there's no payments, including interest or principal, for 6 to 12 months after the disbursement. So that's great from a cash flow perspective, that you can have access to the funds and not need to make payments right away to get through this period of time where we're looking to do social distancing and reduce the incident rate of COVID-19 in the country. And here again, this is where we talked about that 1% payable over 2 years. Again, Howard thinks that the 4%'s gone by the wayside, but if there was and maybe this was where it relates to, Howard, I know that on the PPP application, it asked whether an EIDL loan was taken out prior to the PPP application. I know for some businesses, there's an opportunity to refinance that into the PPP loan, albeit that should be at the 1% rate. So I'm not, just keep in mind there may be something that comes up after the forgiveness on this 4%. Just clarify that with your lender. But regardless, PPP is like super low rate, and it's good to get an application in. And again, if you've not done it already, the program just was opened up on Monday. Plenty of time this week and next week to get those applications in. It is a fairly short form. So I would encourage, doing it sooner rather than later, since this program's first come, first served though. Let's move on to 9. Yeah, I've covered some of this already. Maximum loan size is generally 250% of your average monthly payroll cost during the preceding 12 months. Per the application, there's a different look back period if there's seasonal employees. I think it was something like February 15th, looking back a year. The payroll costs that are being looked at based on SBA interpretations this last week is supposed to be net of payroll taxes, but there's a flurry of articles and commentary asking whether that's really congressional intent. I saw a compelling piece that indicated the payroll withholding shouldn't be excluded in what that average monthly cost would be. That's going to make your loan or your loan threshold that you can take higher by that amount. And it seems to me it makes more sense that business just can't get those amounts forgiven at a later date, that it's actually got to be the net salary that gets forgiven to the employees. And regardless, in any event, for any small business, the maximum loan amount is $10 million. So keep that. And that's going to be for obviously larger, more established businesses with significant payroll. Next slide. Is this still mine, Howard?
Yeah, I was going to do this one real quick.
This one, okay.
So, it probably makes sense given what we've already talked about, what you can use this for. So this is important because, potentially it's, fraud on the government if you were to use it for something else. So I certainly wouldn't recommend that. They're pretty specific. Payroll, as we talked about, employee salaries, healthcare, utilities, rent, mortgage interest. And they've also indicated, SBA has, that you can use the funds without, now not making it forgivable, but without it being a federal issue, to pay interest, not principal, on other debt obligations that were previously incurred. And I think Matt already mentioned, there clearly is, it seems clear from the SBA's commentary that you can have a PPP loan as well as an economic disaster loan that Matt's going to talk in a little bit, but you must make sure that you're separating the uses of the loan and not essentially using the borrowing money to pay the same expense twice, which would allow you to then have non-permitted uses. So it has to be separately delineated uses for the two loans, but you can get both of them if that works out for you.
Howard, let me ask you a quick question, if I could. Have you heard anything about tracing of the proceeds? Dollars are fungible, and so if you draw down from one loan facility as compared to the other, I'm wondering now, since I've got a client that has secured their PPP loan, is it going to be on a draw basis that should be tied dollar for dollar? I'm thinking, in the absence of any sort of guidance on that probably would be a best practice, so they could directly trace it and then prove later to the lender that it was indeed used for payroll. But it's a bit of an ambiguous issue at this point.
Yeah, I haven't seen anything about anyone making tracing requirements. That may be best practice. Where I think you would get in trouble here is, I've had people tell me, well, these, the terms are so good, I'm just going to borrow the money and invest it. Well, that's not a good idea.
Yeah, agreed.
Right. You need to spend it on the business, on these kinds of approved items. Probably it's clear enough in your regular accounting what you use the money for, and that you didn't use it for some improper purpose. Your accountant may want you to do something more rigorous. I don't think the government is going to require you to do that, but I think if there are issues raised later that, in any $350 billion program, there's going to be fraud, and the government's going to pursue fraudulent conduct when it comes across it. So I think that's really the watch point here is, borrow it for the right purpose, use it for the right purpose.
Okay.
Obviously you're going to have to show the government what you use the PPP loan for to get the forgiveness that you want, or the lender. But past that, I think it's between you and your accountant how you do it. But just don't borrow for what's really disaster relief money for non-critical purposes. The bottom line. So procedure, this may be this is a short slide, but maybe the number one set of questions we have at the end. But the SBA was supposed to approve procedures for the loans within 15 days. They have put out an interim final rule, which for a federal agency rule is relatively readable. If you really want to get into this, that's sort of probably the definitive piece of paper besides the act itself. They've also put out a loan application form for the banks to use. You can get that from the SBA if you want to see what the application should look like. Lenders, though, are adding some of their own conditions. So ultimately, you need to find a lender and talk to them about what exactly they need to see. We've talked about before that there were a relatively modest number of active SBA lenders last year. So not nearly enough to support the scale of this program. So one of the things the SBA has been trying to do very actively is add more lenders to the program. And that seems to be going along fairly well as far as I can tell. So lots of new banks, credit unions, certain non-bank financial entities like fintech companies are getting approved or have already been. So the SBA is putting out numbers on a fairly regular basis about how many lenders are approved, but it's getting to be a fair number. And as Matt said, Friday was supposed to be the first day. Some lenders indicated that they needed more guidance, but the SBA is reporting that a number of lenders were active on Friday. You can look on the Twitter feed of the head of the SBA, and she updates how many loans have been made. When I checked it on Friday, it was 17,503 loans valued at $5 billion. Wells Fargo announced earlier today that they have already processed $10 billion worth of loans, and that's all they're going to process. So they're closed for the program. So, finding a lender who's open for business may be the biggest challenge. The application is not that complicated. There are a few questions, as Matt touched on, about the nuances of things that you might need help with, but it's a fairly short process. You need your payroll information. You might need your tax information. You might need your, or some banks might want to see your organizational documents. But it's not a creditworthiness evaluation. It's not really a financial evaluation. They're just trying to make sure that you tick the boxes and that they are correctly calculating the 250% that you can borrow.
Howard,
Matt, with that, I'll pass it back to you.
Howard, who did you say is closed from doing some of these loans?
Wells Fargo has said that their internal target was $10 billion worth of loans, and they already have more applications than that. So they're not accepting new applications. That happened earlier this morning.
I'm thinking of another client that was frustrated that Wells Fargo was holding up their application on Friday, and I'm sure it's an immediate concern for them today as to whether they were included or not. I can say that in Tulsa and Oklahoma City, I know Regent Bank has got a strong presence in this area, MidFirst, Bank First, I'm sure. Some of those are clients of my firm, but those may be some suggestions for banks to reach out to. I would start first with the bank that you're already with and see where that conversation goes. And if you can't get an email response or a phone call response, try something else and recognize that they're very busy with this program. So getting their attention is hopefully not too much of a challenge.
Yeah, I mean, there is, I totally agree. Start with your own banking relationships. They're probably going to be more interested in helping you they already have information about you, so they don't need to do certain kinds of checks that other lenders would have to do. It's going to be easier. But at the same time, if they're not processing it, I mean, there's urgency in this program, which is one of the reasons why we wanted to do this for you guys today. One is, many companies really desperately need the money in order to maintain their payroll. And we've all seen the unemployment numbers. We don't need more people let go if we can avoid it. And that was certainly Congress's purpose in having this program. So the money needs to get out there. But also, $349 billion sounds like a lot of money, but if you do the math, that could be consumed. Now, Congress is already talking about adding to that number if they need to. So I don't want to, scaremonger, but the fact of the matter is, it's a limited pool of money. It's first come, first serve. So we don't really know if it will entirely be taken up or not. So I would definitely, set about the process of trying to find a lender if you're interested in that.
Well, to me, that emphasizes perhaps a desire to get those loans applications in this week, if that's the case. I mean, if you've got a large lender like Wells Fargo that's saying they're already at capacity, I do think there's some urgency. And the form is only I can't recall, 2 or 3 pages long. It's fairly simple to put together, and we'll answer some questions that people have on
yeah. One thing we should note, we mentioned earlier, self-employed or independent contractor, sole proprietorship type entities without employees. Technically, the SBA has delayed their ability to pursue loans until the 10th. So if you're in that bucket, understand that you have to wait a few more days, and, the lenders, now Wells Fargo has said they're going to have another tranche for those customers. So, I don't think it's going to be the end of the line, but do understand that there's going to be another wave of applications probably on the 10th or right after. So if you can get this done before then, I certainly would try to do that. And also, if you are in that, self-employed or sole proprietorship bucket, just understand that you need to be targeting the 10th probably. You can't do it right now. So just another practical note.
Yeah, I think that's a really good point. I'd recalled that they were delaying applications for individuals, but I wasn't aware of the 10th date. So thanks for clarifying that, Howard.
All right.
Now
you want to talk about EIDL?
Yeah, I want to shift gears a little bit to the economic injury disaster loan. This program actually was, economic injury disaster loans is an established program within the SBA, but what they did was that they basically made the 50 states all eligible disaster areas, and thus businesses within them were able to apply for EIDL loans for a 3.75% rate, payable over 30 years, and the loan limit per business is up to $2 million. The nice thing about this is it gave, the way the program is designed is that it is designed to give a quickie infusion of $10,000 to a business, and that infusion is supposed to come within 3 days. With the large subscription to this program, I'm not sure how good the SBA is in getting those funds out, but the amount should be received in very short order once the application is in. Going to the third bullet point, the loan application is at that link. This is a redesigned link. I had put together probably about 67% of a loan application for a client last Monday, and then by the time, and what I was waiting on was getting some personal guarantee information to upload to the site, and lo and behold, between Monday and Thursday, when I was ready to do that, the site had changed because it was crashing too much. It was just really had heavy use, and so they simplified the process a bit. They originally had wanted tax return information to be forwarded through the SBA portal, but then have streamlined that so that's not immediately required, although they may request such information at a later date. The target for these loans, much like the PPP program, is still for the same small businesses with fewer than 500 employees, again, including sole proprietorships, independent contractors, and self-employed people. Also private nonprofit organizations or 501c19 veteran organizations. And similar again to the PPP, industries that have more than 500 employees that meet certain size standards under the SIC code as still being a small business, such as hotels or restaurants, can apply as well. Here there might be collateral required if the loans exceed $25,000 in value, and there might be personal guarantees that are required for loans made where there's a 20% or more owner in the enterprise. Difference between the programs, I would say, is that EIDL can give you that quickie $10,000, which coincidentally is not or does not need to be repaid back. Well, I take that back. If the loan is subsequently not approved, that $10,000 that is released does not need to be paid back per the legislation. Now, this isn't in addition. If the business would separately take out a PPP loan, they don't get to increase their overall forgiveness. That $10,000 would reduce the PPP amount of forgiveness, as I understand how the SBA is going to look at both of these programs together. But for some businesses that might have an average payroll, I mean, the hotel I mentioned before, yesterday or early in the presentation, was only able to get a PPP loan of $25,000, and for them to have access to capital at a 3.75% rate in excess of that loan amount is something they want to secure. So keep in mind this program as part of your strategy overall, in whether it will help your business going forward or just to stay in the business. But do recognize that this is a loan that does need to be repaid, albeit at a lower rate, and notwithstanding the $10,000, that's kind of the freebie that's attractive for this program. Howard, do you have any final concluding thoughts? So we've got quite a bit of time left, but that, frankly, with this program moving as fast as what it is, it may help the participants more for them to ask as many questions as they'd like.
Yeah, no, I think we should turn over questions. I would just, sum up sort of pulling from the themes you had that, if you have, if payroll is not approaching 75% of your run rate expenses, and you have a lot of other expenses, or if you think that the business damage is going to last well beyond 2 months. It's hard to tell now, but let's say that we try to open the economy back up, but for some reason specific to your business, the damage is going to last a lot longer. Then I think you should look at EIDL also, because it might give you some funding to try to weather the storm that goes beyond just everybody being shut down for however much longer. I do think if the closures last much longer than 2 months, that Congress will extend PPP probably. They've already started to talk about that. But if you're anticipating, a long-term slowdown in your business, here's an opportunity to put some cash in the bank at very attractive rates. But you're taking a real loan. The other PPP is more like a grant. In reality, this is a real loan, but at good terms.
Well, let me just say thank you both very much for the overview. I think it was very helpful. We do have a large number of questions that have been submitted. And so what I would like to do is really just go through those in the order they came in, because they're not really grouped into specific areas. And so I'll just kind of go through these one by one. And to both of Howard and Matt, both of you, at the bottom, if you click on the Q&A, you can actually go through the questions and see them as well. but I'll just go through them, starting with the first question that was received. And that was, how long do we have to keep an employee on staff after the PPP program ends to qualify for the loan? In other words, can we fire or furlough the employee after the 8-week period?
That is a good question, because the program is designed to keep people on payroll. I think it's going to be determined a little bit based on when the lender is going to look at these for forgiveness. I mean, do you have a take on that, Howard, as to when? I don't necessarily think the lenders are going to be looking at loan forgiveness as soon as we get through an eight-week period. I don't think that's going to necessarily take place June 30th. And candidly, had thought that'd be something that would be done at end of year. So I don't have a good answer to that.
Yeah, I think the June date is sort of the end point of the test. That's my read of it. So if you get past June 20th? If you get past the mid-June and you have your employees on payroll, then I think you met the test. It's not lasting forever. Whether you can do it for 8 weeks and then get rid of them, I don't know. But I think if you get past that June threshold, then it looks like you're probably in good shape in terms of this program.
Right, and I guess is there a potential there also for that to be extended, for those dates to be extended? I'm sure there is.
Yeah, I think there. I mean, well, it's all politics, so it remains to be seen. But certainly, there's been discussion in Washington already about, do we need to add more money to this because people are worried it's going to run out, and if this shelter-in-place orders are going to last longer, do we need to add another month? So I would be inclined to say they're probably going to extend it as long as the shelter-in-place orders are in place, if they can. But again, you're counting on Congress to do that.
Well,
but it's not a situation where you have to guarantee permanent employment to get the relief.
But based on what
definitely,
I think, Howard, you're of the view that if you would lay off someone after the 30th, then you have kept them on payroll through this tough time, and the government and congressional intent is that they will be able to have that amount forgiven because the goal was to retain employment during that period. I think that's, for some other businesses that may have laid off people, they need to think real strongly about how quickly we need to hire those folks back, because their loan forgiveness will then be reduced, over this period too. So that's, this specific hotel I'm thinking about, I knew they reduced their payroll debts down to the manager. And so now I think they're going to have to think, real strongly the cost benefit of getting forgiveness versus that cash flow outage that goes to the employees if they would bring them back. And that's going to be a demand-driven decision, I think.
Great, thank you.
Yeah, I mean, there's two consequences of not having people. One is your actual payroll is lower, so your forgiveness can't be more than your actual payroll. And two, and that's got to be 75% of whatever forgiveness amount you're asking for. And two, there's this adjustment mechanism in the act that if you have less employees or you pay them less below the certain threshold, it starts to ratchet down percentage-wise what you can get forgiven. So, great. But that all works in sort of a February to June timeframe. That's all they thought was necessary.
Thank you both. Next question: is there clarity on what is considered utilities, or business equipment leases, or software subscription costs? Are those things considered utilities, or is there a defined list?
There's an other box on the PPP program, so I would say subscriptions and things like that could be listed there. If you want to make sure that those can be covered, you may even want to list them specifically. To me, I don't think a subscription is a utility cost. I'm kind of a purist, I guess, in definitional issues. But I would check that other box on the PPP program.
Great. Another question. Have you heard how the state will handle the $600 per week in federal unemployment benefits extended in the CARES Act?
I have not. Howard, have you?
I have not. This is asking the Oklahoma question. I don't know.
Yeah, I have heard nothing either. I've seen nothing come out of the state yet on that either. So I'm not an attorney, obviously, but I have not seen anything on that. Sorry. Next question. It says, when is it ever 1%? If it is forgiven, then it is forgiven. If it is not, then it is 4%. This makes no sense.
Yeah, the 1% applies if you don't get forgiveness of the entire loan. So let's say you got 80% of the loan forgiven, but 20% you didn't qualify for the forgiveness, so you have 20% left. It's at 1% for 2 years.
Yeah, that 4% may candidly have been an early iteration of this. Again, this program was rolled out within, like literally 7 to 10 days. And so it seems that that's gone by the wayside.
Okay, great, thank you. EIDL question. Are there restrictions on the EIDL other than not duplicating costs covered under the PPP program?
I believe that, well, I'm not certain whether there's a requirement to demonstrate economic loss from COVID-19. I think that is I tend to think that it does need to be demonstrated somewhat, and that'll likely define the upward cap of what that loan amount is. It could be up to $2 million. I'm not certain what SBA is going to do to police that, though. This is an application directly with SBA, and so whatever they request in follow-up, that information just need to be provided.
Yeah, there is the CARES Act does provide a list of permissible uses, which is similar to the PPP, but then includes other obligations that are already in place. What does that mean? It could be supplier, things that people you owe money to is how I interpret that. There may be broader uses, but again, I think before you start using it to, buy a new boat or put it in the bank, I think you should really talk to somebody about what you're doing with it.
Well, I think all of the uses that's permitted for PPP still apply in EIDL. I have confirmed that it cannot be used for a refinancing of existing debt. The hotel that I keep mentioning, they've got perm loan on the property that's at a higher rate, 5.85%. Initially, they had hoped that they could refinance the entire note, which would then really help its cash flow if they could get that at a new note, 30 years, 3.75%. But based on the program, and as I understand it in my interactions with the SBA, is that it cannot be used to refinance existing debt, but can be used to pay that interest on that perm loan that may already be existing.
Good to know. Great, thank you. Howard, can we pull up the slides again and have a question specifically around slide 9?
Yes, let's see if I can get this to.
There we go. Yep, slide 9. There we go. Question is payroll costs net of additional employee benefits. It says, can you expound on that a little bit? I know we had a little discussion about that, whether that was still in effect or not in effect.
My understanding is that you can keep the FICA payroll taxes, and this is a little bit subject to interpretation, because I can tell you ADP is taking the position as they assist businesses that they will exclude those net payroll costs. But you can include, like say you got vacation pay that goes out. My understanding is that vacation pay is to be included in your monthly average. So that'll be an upward driver. For your vacation and sick leave, so it would be an upward driver on your average loan amount.
Okay, but we don't, in terms of like payroll taxes, those kinds of things, we think those should be included or should not be included.
There's a split right now on that. I mean, there's an article that folks can Google. Tony Nitti has a really good tax article that he produces, or is a frequent contributor to Forbes magazine. He's got an article on that just came out, I believe, just today, noting that would be an absurd interpretation. But again, what's challenging is you've got ADP, one of the largest payroll processing companies in the country, that is telling its businesses, we'll net this out in your monthly average payroll determination. But I don't think that was congressional intent. At least that's my view. And so I would not net it for the payroll taxes, but I would include the leave and sick amounts in as well.
Yeah, there's a specific exclusion in the Act for on the forgiveness side. You can't get certain payroll taxes forgiven. But why is that? That doesn't seem to affect the 250% calculation, so that's the problem. Some people are counting it and some people are not.
You expect there to be some clarification on that?
I think sometime this week, but you don't want to wait so long that you hold up your application. Depending on, I would run your calculations both on gross earnings paid to your workforce, and then net. You could net it, just see what your delta is between them. And if it's not a big number, I'd go with the gross, frankly, and have the bank push back. And if they took issue with it, if they requested more information, I'd just say, look, this is my understanding of the statute as it was written, and I think that'd be a good faith application that's made.
Good answer. Okay, great. Another question here specifically related to freelancers and solo entrepreneurs. It says, what is the best thing to do if you are the only employee of the business, or if you and your business partner are the only employees of the business? Do you need to have a consistent salary to show payroll?
Do you want to take this one, Howard? I mean, I think it just.
Yeah, I think the answer to that is no. You don't. It specifically says that compensation that's personal employment income or self-employment income counts, not for people who are paying independent contractors, but for the independent contractor themselves. I think the issue I've heard people have an issue with, certain kinds of entities, and Matt would explain it better than me, certain kind of entities, the owners have to basically count everything as compensation that gets payroll tax or self-employment tax. Certain kind of entities, the ownership can get income that is not counted as compensation for tax purposes, for personal income tax purposes. And what I've heard is banks have been taking the position, well, if you didn't pay self-employment tax on it, it's not payroll. If you paid self-employment tax on it, it is. So that may be sort of the line, but Matt, Mike could explain the nuances there. But, I think it doesn't matter whether you're taking it all out at once or you're taking it out in pieces, as long as you are counting it as compensation for self-employment.
Yeah, to expand on that, in your prior comment about there's a separate program for sole proprietors that opens on the 10th. Would you think that also would apply towards a two-person partnership that only has 1099 income?
I would think they're going to count that as in that same grouping.
Starting on the 10th?
Yeah.
Yeah, that's my thought as well too. That if you don't have actual payroll withholdings, that you're probably going to be in this other grouping that starts on the 10th for applications. And where this can be challenging is if I'm thinking like salespersons that frequently will have a high income. Recall there is this $100,000 cap there, and so I've gotten the question, can I just divide that by 12, and that's going to be my average monthly payroll. I think per the application they actually have to look at over the 12-month period in 2019 or the seasonal rule that's in the application and look at past performance. I wouldn't be so bold as to arbitrarily say payroll is going to be or the max payroll will be 83.33 per partner and something like that.
Great, thank you. Do either one of you, we have a question about how to track the status of a completed EIDL application. Do either one of you know how to do that? Is there a single location?
I thought on the website that they've got something to track status of EIDL. There's 3 circles, and my recollection is the far right circle. You can click on that, and it will give some update on the status. But I'm not entirely sure. The EIDL, they went from largely. I pulled that website up earlier today, and so the website now looks very similar to what it did originally. When I looked at it last Thursday, it looked completely different though. And so what I think they did from Monday to Thursday was they streamlined it to a better uploading system. And now I think they're overlaying some of the graphics and the user interface that makes it easier to understand the overall website. I think some of that is coming back or has come back now. And I believe that there was that third circle is I think what you can click to check on the status of it.
And Matt, that website you're talking about is the SBA website?
Yeah, it's referenced on slide, let me pull it up, 7, I believe.
And gentlemen, both of you, are you both okay with us sharing the slide deck with all the participants?
Yeah, in the PDF form I am.
Yep, we can do that. We'll make that available as well.
Yeah, I'm just trying to find really quickly the page number that, or the slide page number where the.
Okay. Well, I'm going to go ahead and jump ahead to the next question.
It's on slide 12. Slide
12, okay. And what is that? What is the address? What is that, just for people that don't?
Well, it's https://covid19relief.sba.gov/#.
Okay.
There's probably other ways that they've directed traffic to it as well, but that will pull it up.
Okay, great, thank you. Are there, another question here on the EIDL, are there stipulations on what EIDL funds can be utilized for? Specific example, this person says they're thinking about expanding marketing and sales funnels during this time, but would need EIDL capital to do that. And would that be allowed or encouraged?
I can look that up while we're continuing to talk.
Okay. Okay.
Someone can come to, actually, if that person can email me after online, I can clarify that. I recall there's some language that addresses on whether you can expand or not with the funds. I honestly, I just can't remember.
Okay. Well, what we're going to do is at the end of this, we'll email all the participants. We'll email, if you're both okay, we'll share contact information as well as a PDF of the slides. So if people have any follow-up additional questions that we don't answer today. We talked about this already. But if you want to go a little bit more in depth on how to handle 1099 employees.
Yeah, 1099 employees, the SCA has made that pretty clear. You can't claim them on yours as payroll. They need to do their own application.
So they cannot be claimed and used in the calculation of your average monthly payroll.
That's right.
Good, great.
And that's a clarification that came down just like recently. There was, to me, there was some ambiguity before on that, and that's
okay.
That's exactly right what Howard said.
This is an interesting question. This is very specific to a startup company. It says for the PPP program, if you are a contractor or self-employed and have a new company as of January 1st and therefore don't have a financial account history, should you just estimate the amount needed to cover your payroll and expenses for the next 2 months? Or what should you do?
No, it has to be based on historical. So what the act would say is you look at January and February 2020, what your payroll was.
Okay. Great. And then use those to calculate your average.
Yeah,
month.
and then you calculate your average payroll that way.
Okay. Another great question here. It says, if you elect to defer Social Security taxes, are you still eligible for the PPP and or the EIDL?
Defer, can you shed some light on?
Yeah, there's a CARES Act provision that allows you to defer some payroll taxes. And I believe that if you do that, you're not eligible for the PPP, but I don't think that affects the EIDL.
Oh, is this the credit issue?
Yeah, there's a separate portion of the CARES Act that basically allows people to defer some of this, but I think there's a specific provision. You can email us and we'll confirm, but there's a specific provision that says if you use that, you can't use PPP.
Yeah, I recall that as well. I know for sure that you can't use the PPP. I'm not sure about the EIDL though. You might be able to utilize the EIDL, but that would need to be.
That's right.
Okay, great. Thank you. Let's see. Looks like this is going to be our last one we've got submitted here. We're doing pretty good. We're not too far over on time. Last question then. Should you net from payroll costs additional employee benefits like cell phone allowances, clothing allowances, internet, parking, etc., or should that be included in your payroll?
I don't know. It's to me, it's ambiguous enough. I'd include it. That's a bit of self-serving though, because that way you'd get more of a higher loan that's issued. But to me, it's like it's an expense of the business that's directly related to payroll. So I mean, to me, that's what I would fall back on. And if you're questioned on that, I'm not sure. I mean, obviously, the more employees you have, the more it's magnified as an issue that could be reviewed. But that's what I would do with what's going on.
Yeah, I agree. I would include it in benefits.
Yeah. Yeah.
Someone put another comment up. They said /. So I think in that email that I gave before, I might have had instead of /. Those might be. I guess I don't know what a / is.
We'll make sure we share it in the follow-up to everyone. Okay. Well, I said the last question. We had one more come in, and then we'll end on this one. You said, should freelancers submit for EIDL, PPP, unemployment, all the above?
Now, this is a really good question. EIDL, you're just borrowing money. The other two, they're giving you money. So maybe you want an EIDL too, but I would definitely do PPP or unemployment.
You can't do both, though. You can't do PPP and unemployment.
No, because then you're not. If you do PPP, you're not unemployed, right?
Right.
I think this is a tough question. You can run the math of, okay, well, what's 2 months of average pay versus what I can get with unemployment with the extra $600. I think most people are going to find out that the PPP is a little better, but maybe it's close. But the real question is, do you want to shut the business down or not? Because to do unemployment, you basically got to shut your business down and say I'm out of business, because that's what the unemployment's going to want to know.
Well, I would say
if you
go ahead. I'm sorry.
Yeah. So if you want to keep the pilot light on, maybe think about the PPP. But it can be, the math can be close.
Yeah. Great point.
Go ahead, Matt. Sorry.
Well, I was just going to say briefly, if you do make that decision in staying in business, the only benefit of separately applying for the EIDL in my view, is if you want a greater line of credit at the 3.75% rate. If you don't want that because you don't want to take out that larger loan, the only utility of EIDL is to get $10,000 deployed within, they say 3 days, but 3 to 5 days, I'll say, after the application goes in. But if the PPP is being processed as quickly as what my other hotel client has done, and the fact that the EIDL 10,000K advance gets offset by any other forgiveness, it may be extra effort that's not needed. I suppose the only benefit with EIDL is that that first 10,000 is going to be forgiven regardless. And so if you run into some loan forgiveness issue where you're not getting as much forgiveness as what you thought, that at least you're guaranteed 10,000 is going to be forgiven. Hopefully that helps.
Yeah, that's great. I just one point too, and this I don't think we should discuss here, but there are a lot of resources available online as well. Tulsa has a website, tulsaresponds.org, which was put out, I think, on Friday, which is a great resource that goes through some of this. It also points people in the direction of a specific SBA lender that's accepting applications, as well as the Tulsa Recovery Fund, which I think is really a loan program meant to sort of bridge the gap between now and when the PPP and EIDL funds come in. So those resources are available also. And then we will follow up with all of the participants that joined today with contact information for both Matt and Howard, and we will share a PDF of the slide deck today as well. So just want to say thank you to both of you for making the time. I know you're both very busy and have a lot going on, but our community really appreciates it and appreciates your expertise and your time today. So thank you both very much.
All right. Thanks, Devon.
Okay. Take care.
Enjoyed it.
Thank you.